Welcome to the stock workout where we flex on the market to make gains. In this video, I'm going to be talking about Microvision, ticker symbol MVIS. Now, this is a stock that's had a huge run up in the last few days. This stock has run up from around $10 all the way to around $19 in total. From the low to the high, it ran up just under 90%, coming in at 89%. It ran up in the space of 3 trading sessions, which was pretty impressive. I've covered this stock previously in my previous videos as well, so I gave the support and resistance levels. In my previous video, I gave the support level at $15.60 and a resistance level at $19.29. Now, before I get into it and get into the technicals of this, if you haven't already, subscribe to the channel and drop me a like. I am going to be going through an article as well on Yahoo Finance before I start doing the technical analysis, so let's hop into it. Microvision stock jumps 5.2%. Will it continue to soar? So this article just goes over the price action. So it says Microvision shares ended the last trading session 5.2% higher at $13.14. This was on Friday, April the 23rd. And it was released at 10:40 a.m. Since then, the price did increase much higher than that. But basically, from this article, the takeaway point, in my opinion, is this bit here. The maker of drivers for miniature video displays is expected to post quarterly loss of 2 cents per share in its upcoming report, which represents a year-over-year change of 50%. Revenues are expected to be 0.75 million, down 49% from the year-ago quarter. Earnings and revenue growth expectations certainly give a good sense of the potential strength in a stock, but empirical research shows that trends in earnings estimate revisions are strongly correlated with near-term stock price movements. The near-term stock price movement has been that it has increased quite a lot. So for Microvision, the consensus earnings per share estimate for the quarter has remained unchanged over the last 30 days, and a stock's price usually doesn't keep moving higher in the absence of any trend in earnings estimate revisions. So make sure to keep an eye on MVIS going forward to see if this recent jump can turn into more strength down the road. So what this is saying is that the expected earnings per share is 2 cents per share in the upcoming report, which I believe is on the 29th of April is when earnings are due. And what the article is saying is that, yep, over here you can see 29th of April. This estimate's coming in at 0.3, but the Zacks estimate is at 0.02, so 2 cents per share. And what this is saying is that because the estimate hasn't changed over the last 30 days, but the price has been steadily and rapidly increasing, this is saying that that is really good, and that is a bullish signal. And that's why this is saying to keep an eye on MVIS going forward to see if this recent jump can turn into more strength down the road. The stock currently carries a Zacks rank of hold, which is also a good sign. So taking a look at the charts once again, in our last trading session on Friday, we had a huge increase. We closed on the day 36% higher. In the after hours, we did drop down slightly. We retested that resistance level of $19.29. However, we failed to break through. I think I should mention as well, I have the 21-day EMA up on the screen along with the 50, 100 and 200-day moving averages. I have the volume and the RSI as well. Now, the 21-day EMA has crossed over the 50, 100 and 200-day moving average, and it crossed over down here. Now, that is a bullish sign. However, it retested this $19.29 point and it failed to break through. Now, this is something that I want to point out because previously we have tested that level around 1, 2, 3, 4, 5 times we've tested it previously, and now on the 6th time we've failed to break through. However, I'm not too worried about this. And the reason for that is if you take a look at the volume was at 117 million shares, and the average 10-day volume was only 26 million. So the volume's picked up almost 5 times its average 10-day volume, which is reflective of this increase in the price. However, if that volume is sustained, we should be able to push through this $19.29 point. That is a huge resistance, because we've been unable to break that numerous amount of times. And if we don't break through that, we may see the price come back down to this $10 level, because the price has been bouncing around this channel since 2nd of March. So since the beginning of March, it's been bouncing around this channel. So we do need to see it break through that $19.29 mark. The immediate level of support comes in at $15.60, because we had a double bottom over here, and we held above that, but then afterwards we did break through that as well. So your first level of support comes in at $15.60, and then the next one lies all the way down here at around $10. Now, we did see a decline in the price after we got rejected at $19.29, and that would have also been due to the RSI being in the overbought territory. So anything over 70 is overbought, anything under 30 is oversold, and we were at around 85 on the RSI when we were at this peak, and then the RSI decreased and so did the price. However, the reason why I'm not too worried about this is because if we draw a quick fib retracement on this, you can see here that it had a run up and the price decreased, but it held this 23% Fibonacci retracement level. It did hold that. This is a microscopic analysis of the stock for the previous few trading sessions. So on this microscopic level, we did hold this 23% Fibonacci retracement. So as long as we keep holding that, and that comes in at around $17, then we could establish a immediate level of support along that line, and hopefully if the volume is as high as it is next week as well, we could push through that $19 mark, and that is what we need to see. We definitely need to see a push over that $19 mark. So we held the 23% pretty well. We held it pretty well at it comes in at $17, and we closed on the day $17.97, and then the price decreased to around $17.60. I think on Google it says $17.91, so there's slight discrepancy there, but we are above the 23% Fibonacci retracement. Now, one other thing to bear in mind is the short interest for this stock. So if you take a look here on FinViz, so I'm on FinViz here, as you can see, it's Microvision stock. The short float comes in at just under 20%. Now that is quite high, so we could be setting up for a short squeeze here. This is another bull versus bear scenario. We could go for the short squeeze here, and if that does come to light, then we will most likely blow straight past this $19.29 price point. We do have a catalyst coming up, which is the earnings coming up in a few days. If the earnings go well, if the report's good, then we should blow straight past this $19.29 mark, which we have been unable to break through on numerous occasions. So short interest is coming in at around 20%, so we could be looking at a short squeeze here. Volume's up almost 5 times this 10 days average volume, and we have earnings report coming up soon, which will act like a catalyst and hopefully push this price higher. I'm not currently worried about the retracement that happened on Friday, since we were unable to break this $19 mark, because we are sat at the 23% Fibonacci retracement. As I said before, the 21-day EMA has crossed over the 50, 100 and 200-day moving average, which is also another bullish indicator. So with sustained volume, we should be able to break through that $19 barrier. That's all I have for this video. If you appreciate that, drop it a like, subscribe to the channel so I can keep bringing you more content, and I'll see you on the next one.